Ladies and gentlemen, good day and welcome to the RSWM Limited Q3 and 9 months December ended FY22 earnings conference call. We have with us today from the management Mr. Avinash Bhargava, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on management's current belief and expectations. It must be viewed in conjunction with the risk that our business faces that could cause our future results, performance or achievements to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand the conference over to Mr. Avinash Bhargava for opening remarks. Thank you, and over to you, sir.
Thank you so much. Thank you. Good afternoon and warm welcome to all our participants in this Q3 FY22 and 9 months earning call. I hope you had a chance to look at our investor presentation, which is uploaded on the stock exchange and on our website. As you know, we are manufacturer of yarn and denim. Yarn segments include synthetic, melange, polyester, and viscose yarn contributes 80% to our revenue. Denim, which contributes 20%, includes both spinning and fabric manufacturing. I would like to break our opening remarks in 3 parts to start with key financial highlights for the quarter and 9 months brief overview on sector and our segments. During the quarter, we did about 1,001 crore Indian rupees of top line in Q3 FY22, which is about 39% up on YOY basis. Our domestic turnover has increased to 25% on year-to-year basis as compared to Q3 FY21. Our export turnover has increased by 71% on year-to-year basis as compared to Q3 financial year 21. EBITDA stands at INR 122 crores, which is 22% higher as compared to the same quarter last year. Our PAT for the quarter stands at 50 crores, up 56% higher as compared to the same quarter last year. Coming to 9 months performance, our total sales stands at 2696 crores, up by 81% on year-to-year basis. Exports recorded sales of 9 months 1006 crores, up 111% on year-to-year basis. EBITDA for 9 months goes from 80 crores to 322 crores. PAT for 9 months stands at 130 crores, turned positive on year-to-year basis. The strong demand witnessed during the quarter is mainly on an account of resumption of offices, shopping complexes, festival and wedding season due to upliftment of lockdown restrictions. The strong realization demand in all segments has helped us in posting strong bottom line growth. A strong cash flow generation has put RSWM in very comfortable position in terms of liquidity. Management is exploring inorganic long-term growth opportunities which will help RSWM to capture market opportunities by widening product offerings. Apart from this, organic growth opportunities within RSWM. Net debt to equity stands at 1.03 as of 31st December 2021. As we have announced in past quarters, company is investing around 330 crores in expansion of denim, fabric, manufacturing capacity, cotton melange yarn manufacturing capacity, and modernization oblique balancing equipment across all units in processing are progressing well and will start contributing from next financial year. In our Q2 financial year 2022 earnings call, we have announced entering into knit fabric business with initial investment of 80 crores in first phase, which is progressing well. All the above investments in denim, cotton yarn, knits are expected to increase our top line incremental by 500 to 600 crores in next financial year. Now coming to yarn business, textile industry has been significant rebound and growth in both end market, domestic as well as global markets after the outbreak of COVID-19. The sector has utilized the opportunity in best possible manner, which can be validated by the increase in business and exports. Textile exports in first 9 months is up by 31%, which is nearly about $30 billion as compared to $21 billion in financial year 2021. With lifting of lockdowns, the company has worked in direction to serve its stakeholders and will continue to strive growth in future also. Huge demand has also resulted in excessive pressure on logistics, rising freight charges due to shortage of containers, higher coal prices and cotton prices are impacting the sector margin. Continued support from government via various schemes introduction has put sector in better space. China Plus One strategy has brought focus in Indian market globally. The importers have started looking for different suppliers after US passed its law related to ban of import from Xinjiang region, which accounts for 20% of the globally produced cotton, which has helped Indian suppliers to come into picture. We see far more opportunities for yarn in times to come. As far as denim business is concerned, strong demand witnessed in Q3 of FY22 across all markets. We are progressing well in denim during the quarter. We participated in Gartex, our first offline exhibition after a gap of almost 2 years due to COVID. The response was positive. We witnessed more than 100 customers over the 3 days. Our sales with brands are progressing well, and we have now tied up with 7 brands like Levi's, Lee Cooper, Killer, Spiker, H&M, Mufti, and Benetton. We continue to touch milestone sales numbers in denim business despite of challenges to deliver due to capacity constraints. Our order book on denim side continues to remain held. Today, my JMD was also to be with me, but for some reason he has left the office. Therefore, I would like to open floor for questions, and I will answer the session. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Thank you. Congratulations on a strong set of results, sir. Just wanted to understand Thank you, sir. So, what are the sustainable margins that you see in this business? Because as a company, our margins have not increased like other cotton yarn companies. These are normalized level of margins. So, how do you see these margins behaving going forward in light of organic current capacities and when the new capacities come in?
Actually, Prerna, what you will see that the contributions of 230 TVs and 130 cotton, if we will take examples of 230 TV contribution was 90 rupees 93 per kg, and which has come down to 89 rupees 89 because of increase in prices of polyester, recent increase in prices. And as far as cotton is concerned, the contribution has touched around 108 to 110 rupees per kg. Now it is 82, 85. But yes, as you know that every increase will settle. It cannot be permanent because the cotton prices has gone up around 71,000 on if we take average of RSWM. Otherwise, on quality to quality basis, this has touched to even at 77,000 per candy. So this, we hope that this price will come down and we will be able to handle this situation of price increase in cotton.
Okay. Okay. But do you think, sir, there is a downside risk on our margin, or we should really see an upward trajectory in our margins, given that you are looking forward to start knit business, your denim business is also gaining traction, so margin improvement can happen there also. So there is a mixed improvement that is happening, and there can be improvement because of better product mix going forward on a sustainable basis.
Actually, if you will see this, are you talking about denim or?
I'm talking as a company as a whole.
Company as a whole, yes, the margins have came down to some extent, but yes, the prices will settle. This change of product mix in denim as well as in yarn also will help us to maintain this profitability as a company as a whole.
Okay. And sir, does this Mayur Suitings sale revenues and EBITDA form a part of this quarter's numbers?
No, actually, we had closed this Mayur brand on 31st of August. Some transaction between Mayur and Donier was to take place. It is over on 31st of December, and every penny of that loss on sale has been accounted for. There are some losses in this quarter also, Q3, because of this employee liability and all. Employee salaries, employee liabilities, those are being transferred to our other businesses like knits, like other PV units. The employee have been transferred to these places, and now after executing few of our orders which were in the name of RSWM, not in the name of Mayur, I think that everything will be over from our side as far as Mayur brand is concerned by 31st of March 2022. Sorry.
Okay, so then we should expect fabric business should also report a bit positive number from first quarter FY23 then, correct?
Yes, first quarter FY, they should be positive from fabric side.
Okay, even fourth quarter there should be some loss, minimal loss, but there should be some loss, right?
I think marginal loss may be there, but I don't think that there would be any loss as far as fabric is concerned.
Okay.
PV fabric is concerned.
Denim is a bit positive.
Denim, let me explain you this denim business also. Treating this denim fabric apart cannot earn profit if you are not supported by denim spinning. So we are doing balancing. Recently, if you look at the order position of Q3, we had sold around 80 million meters in Q3, and the profit margin, profitability of denim also has been increased. So it will be difficult to transfer this price increase of cotton to fabric buyers or garmenters. But yes, this fabric denim business will give us returns in Q4 also, and then Q1 of 23.
Okay, sir. Thank you so much for answering these questions. All the best.
Thank you, Prerna.
Thank you. Reminder to the participants to ask a question, please press star and 1. The next question is from the line of Abhilasha Chitalia from Mehta Investments. Please go ahead.
Yeah, thank you for giving me the opportunity, and congratulations for the good set of numbers.
Abhilasha, your voice is not clear.
Is it better now?
There is some disturbance from your voice, ma'am.
Am I audible now?
You are sounding really low. Ms. Abhilasha, we cannot hear you.
Is it better?
You are sounding low, ma'am.
Okay, then I will connect again. Maybe there is some issue.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Samud Jain from Interglobe. Please go ahead.
Yeah, hi. I wanted to understand the EBITDA margin for yarn and cotton business separately. Hello?
Pardon?
Can you tell me this cotton margin and the denim business margin separately? And PV yarn business margin also, EBITDA margin?
EBITDA margin of PV is around 12 to 13%, and if you will talk about this denim yarn business, it is around 15 to 16%.
And cotton business?
Cotton business is 15 to 16% EBITDA margin. Average is around 12%. Actually,
what is the percentage of cotton business?
RSWM has variety of product basket, so
Correct.
we can talk about average only.
Yeah. So if I exclude the other income, your average EBITDA margin is coming approximately to around 11.5.
Yes, 11.5, 11.9, 12%.
Correct. Because if you have a look at the other players in the industry, like say suppose the knitted spinners is talking about a EBITDA margin of 20-25% kind of. The other players are also giving a minimum EBITDA margin of 15%. That is why I was looking at 11.5 to 12%.
Actually, you cannot compare Nitin and all with RSWM, because Nitin is not producing polyester viscose yarn, or it is not into you can say in fabric.
Correct.
They are not into Milan yarn also.
Still, EBITDA margin of around 11.5 to 12%. Don't you think it's on the lower side? And is there a plan to increase this?
If you will see for this year that there is a loss in fabric also.
Mm-hmm.
So
yeah, can you tell the exact figure? What is the loss which is there in the fabric division? Maybe because of one-time loss which is there.
Actually, this it has minus PBIDT of around 14 crores.
Of 14 crores.
Yes.
Okay. So this 14 crores would not be there next quarter onwards, right?
Yes. It will not be there from next quarter.
And what is a reasonable EBITDA margin if we should assume if we want to do a projection for RSWM maybe for next financial year? What is a fair bit of assumption that we should take EBITDA margin?
EBITDA margin of RSWM should be somewhere around 13 to 14% in next year.
13 to 14%.
Yes.
And
if you will take the projections of this year, our annual business plan and product mix and all, you can think of about 13 to 14% average.
Okay. And what is the tentative the capex? When will it start giving results? Like, suppose from when can we expect that?
The ongoing capex, which is of about 330 crores, will start giving the results from moderately from 1st of July. These will start the production in first quarter only. But initial problems, machine settling down can take 1 or 2 months, and Q1 also. And you can hope that your company can start operations in full swing in all these ongoing projects from 1st of July.
Okay. So the turnover due to capex, you said somewhere between 500 to 600. Is this 500 to 600 on an annualized basis, or for 9 months we can expect this figure to be achieved?
Pardon?
The additional turnover due to capex, you said we can expect from between 500 to 600 crores, right?
Yes, on annual basis. Actually,
on annual basis.
On annual basis, if we will optimize this figure and we will say that it will start from 1st of July, you can hope around 350 to 400 CR in next financial year.
Okay. And sir, if you can just give us a little bit of idea on the export side also, how's the demand and what is the kind of projections that we can expect on the export side?
Actually, if you will see the export numbers in this last quarter of Q3 of 21-22, these have been improved, and we hope that this will continue in Q1 also. As far as denim is concerned, we have the sole position till April or May, and as far as yarn is concerned, we have 2-3 months orders in hand as of now.
Okay.
So we don't feel that there would be any setback in PV yarn or cotton yarn or denim, any business.
Okay.
And from next year around May or so, we will start the production of this knitted fabric also.
Okay. So one last question. I just wanted to understand the kind of inventory that you would be carrying, cotton inventory. What is the typical inventory level?
Cotton inventory and all have came down drastically.
Yeah.
In terms of quantity, but yes, value-wise, it has been increased.
So approximately like how many months or how many days of inventory are you carrying, sir?
Normally we keep the inventory of 1 or 1.5 months at max.
Okay.
At max. Putting together all whether synthetic yarn or whether this cotton yarn.
Okay. So the kind of momentum that we've seen in the cotton yarn prices, can we expect something similar in PV yarn as well?
Actually, PV yarn has also margins have become thin because of this increase in polyester prices. But as far as market of PV is concerned, it will be better because of very high price increase in this quarter Q3 in case of cotton. So you can expect better market of PV also, because to some extent the demand of cotton will be compensated by the PV yarn.
Okay. Thank you, sir.
Thank you. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, good evening, sir. I just wanted to know how much within yarn, how much is our cotton yarn percentage?
in
with yarn segment.
total yarn segment. Actually, if we will break up this entire business of RSWM, this is about 60% of PV yarn, and rest of the 40% is Milan yarn 20%. Denim and denim fabric is 20%. Right. In denim itself, yarn is 80% and then denim fabric is 20%.
So cotton basically we use for coarser count only. We don't do cotton fine yarn basically.
Yes, it is single 30s and double 30s in cotton.
Understood. Okay. And in terms of the expansion, what we are doing for knitting, how many machines we are adding, and what kind of turnover we are expecting in knitting capacity addition?
This is 400 metric ton. The capacity of knitting fabric is considered in terms of metric ton, and this is about 400 metric ton in Modi.
Per metric ton per
month.
Per month. Okay. And in case of export incentives, what we get, what is typically a percentage of FOB or export value, our export incentive we get on weighted average basis, and are we getting any scripts or any because some of the textile companies result what we have seen, they have done some impact of this sale of the scraps at lower value than what they have realized. So I just wanted to get clarity on that front for us also. What is overall net export incentive we get, and any impact on this incentive amount?
Ladies and gentlemen, please stay connected. The line of the speaker got disconnected. Ladies and gentlemen, thank you for patiently holding your line. The line of Mr. Avinash Bhargava is reconnected. Thank you, and over to you, sir.
Yeah, hi sir. Hope you got my question, or should I repeat?
You please repeat.
Yeah. One question was regarding our export incentive. How much export incentive we get? That was one question. And is there any impact of the lower sales in the scripts? Because some of the textile companies' result we have seen they have taken a hit because of the realization is much lower by selling the scripts. So just wanted to get clarity on that front from your side.
Actually, in RSWM case, only 21 crores RODTEP is in hand, and we have accounted for all kind of discounting in our balance sheet.
Okay. And how much was the export incentive in this quarter?
There would not be any kind of loss as far as this export incentives are concerned.
Got it. So on percentage basis or on obsolete term, what was the number, like on FOB value, how much net impact or net export incentive we get, or if you can share what was the amount in this quarter or 9 months in terms of export incentive?
Actually, it varies from product to product, and it is in terms of percentage only, and it will be difficult to calculate on phone. Rather, I can tell you the percentage product wise which is available to RSWM. I can tell you about percentage only.
Yeah, you can share one or two main products, just percentage that is.
On synthetic yarn, the rate of RODTEP is 2.5% with value cap of rupees 1.80 per kg. And in case of cotton yarn, the percentage is 3.80% with the value cap of rupees 11 rupees 40 paisa with value cap. Cotton blended yarn This is 3.80 with value cap of rupees 11.40. Synthetic fabric, which we are not doing now, except this pending orders of this fabric business, and denim 4.30% with value cap of rupees 3.40 per square meter.
Got it. Thank you very much.
Thank you so much.
Thank you. The next question is from the line of Siddharth Mohata from Principal India. Please go ahead.
Yeah, good afternoon, sir. Sir, my first question yes, sir. Sir, as you clearly sir mentioned that there has been increase in polyester and the cotton prices. So, sir, so the current prices of PV dyed yarn or the cotton grey yarn, sir, does it reflect the increase in the price which was seen in polyester and cotton, or still we are in the process of taking some price increase in the month of January and February?
Actually, we do try to transfer this price increase to the customer, but customers are not ready to take this price increase. As far as export is concerned, challenges are there in passing the increase in cotton prices. Customers are asking for lower prices as they are unable to pass on to the fabric. Gap in case of export is 25 to 30 cents a kilo, and in case of domestic sales, it is around 20-25 rupees a kilo.
Okay. Sir, this is the extent of price increase that we have to take, if you can explain it.
Pardon? I could not understand your question.
Sir, you said that 25 rupees and 25 cents. So what this number indicate?
Actually, there is a gap of this 20 to 25 cents a kilo. The price, if the price increase of cotton is there, we could not pass this 20 to 25 cents a kilo in case of exports and rupees 20 to 25 in case of domestic yarn sale. But yes, when new order we book, gradually this gap is reduced. Say it will be reduced to say 15 to 20 rupees, then 10 to 15 rupees, and over the period of time we will recover from the customer. So over the period of time we will be able to recover from the customer.
Correct, sir. So this 25 rupees, sir, the price gap, sir, that is still needs to be accounted for. This is for in our cotton yarn, or this is in our PV yarn?
In PV yarn, you can say 10-15 rupees, and cotton yarn, you can say 20-25 rupees.
Correct.
Yes, everything is not permanent. This price increase of cotton will also settle down, and this price, if it will continue, we have to pass this price increase to the customer. No option.
Okay. And sir, you have mentioned that demand for PV yarn, it continues to be quite good, and the uniform season is also at the peak. So in case of PV yarn, which is which comprises maximum percentage of our yarn, so it will be bit easy to take the price increase within PV segment.
Within PV segment also, we will be able to take this price increase from the customers in this uniform season also. I don't think that there would be any challenge. Yes, we would not be able to recover this price increase immediately, but yes, within a month or two, we will be able to.
Okay. Sir, in your earlier comment, you have mentioned that in Q3 there was a loss of 14 crore in fabric division, and that was mainly
No.
Okay,
It's not in Q3. It was total. It was total inclusive of denim fabric and fabric both. Fabric segment.
Okay. So fabric segment, but this amount it was for Q3 only.
Not for Q3. Not for Q3.
Okay. So it is 9 months, right? Something like that, sir?
Yes.
Okay. And if I could understood, sir, you said that in Q4 the loss is not going to happen because Mayur thing it has been completed. Whatever order it was supposed to be executed, that has been done. So we will be only left with the denim segment, and demand for the denim appears to be quite good. So quarter 4, it would be a positive operating profit as far as
Siddharth, let me clear you one thing.
Okay.
Actually, we have some fabric in case of fabric division which has to be exported, which was manufactured, and these export orders have to be executed. Right?
Okay.
But there would be no loss on these exports. And these will be exported in the name of RSWM, not in the name of Mayur. And after that, we will not be doing any kind of business in the name of Mayur.
Correct. So if I have to take it forward, starting like April 2022, which is the financial year 23, so what can be the normalized margin in our denim segment, provided we have done a lot of good work, we have won some new clients, new orders. So what can be the sustainable margin in our denim segment in FY23, sir?
Actually, if you will see the denim prices, the average price realization in case of yarn was 221.
Correct, sir.
In Q3, and if we will consider this denim yarn independently, this will be a profitable kind of business. And then if we will consider this denim fabric only, the margins would be lower in case of denim fabric. But yes, overall, as we are producing the denim yarn for our own captive consumption, the margins would be better than this 2021 or 21-22 in the year 22-23. Margins would be better because we would be starting this captive production of 20,000 spindles at denim plant, and then we would be able to cater our own needs from our own plant.
Okay.
For this denim expansion.
So once this 20,000...
Could you got your...
Yes, sir. Yes, sir. Sir, so this once this 20,000 spindle, captive spindle, it starts for denim fabric. So then the entire denim fabric yarn requirement will be covered by our in-house production of denim yarn.
Yes. If there would be some product mix kind of changes, so we will buy the yarn from market also. If it is cheaper for the denim business, then we would buy from market. If the cost of our own product is higher, then we will not supply to our denim fabric plant.
So then in that
as these are separate business centers.
Okay. Sir, but sir, then in that particular case, if I have to combine yarn and the denim yarn and the denim fabric, and with this new capacity coming, and outlook it is looking quite good, can we assume, sir, roughly 10 to 11% of EBITDA margin or operating margin on the entire denim segment?
It will be better than that.
Okay. So that is helpful, sir. And sir, in terms of cost control, sir, if you can just help, especially in case of employee cost, if I have to compare employee cost of RSWM, even though it has decreased in the last 2 to 3 years, but if I have to compare it with some of the very efficient industry players, we are still on a little higher side. So what are the steps being taken to reduce the employee cost?
Well, let me explain you, Siddharth, this thing in case of RSWM. RSWM is not like other players in the market because RSWM has its own setup of 60 years. It cannot be curtailed in a day or in a year, right? So, as far as this employee cost is concerned, for higher management kind of people, we are not recruiting anyone who is at higher post. These are being elevated internally. We have the program of employee elevation, succession planning within the company. This is being happened in this last 1 or 2 years, you can say. Every employee at senior level is being promoted internally, right? We are doing kind of manpower studies also within this company, like in PV, in cotton and all. we are doing benchmarking for wages cost. We are doing benchmarking with LITRA, and accordingly we are trying to make our annual business plans with respect to the LITRA benchmark, and then according to that workload, we are optimizing our workforce. On worker side, we are doing LITRA kind of analysis, and on staff side, we are trying to control this manpower cost through internal elevations or the persons being retired from RSWM. No person is being recruited again, and this is being addressed through job enlargement and job enrichment kind of thing.
Okay, sir. So one can also assume, sir, that this increase the capacity which is coming in Milan yarn and in the denim fabric, so it will lead to a very
yes. One more thing regarding employee cost, which has came into my mind. We are doing this Milan business expansion at Kharigram, right?
Correct, sir.
We have not recruited any senior person or any managerial person for this business. This will be run by production related recruitment only. So we will recruit supervisors only, and no additional hands in commercial or in senior technical persons will be taken. Now you can take the next question, please.
Sorry to interrupt, Mr. Siddharth.
Yes,
may I request you to please rejoin the queue? We have participants waiting for
Absolutely.
you.
Yes, done. Thank you.
Thank you.
Thank you, Siddharth.
The next question is from the line of Krishna Kumar from Lion Hill Capital. Please go ahead.
Sir, good evening, sir. Congrats on a good set of numbers amidst rising costs. Sir, you have kind of given us some perspective on the price movements in terms of the different kinds of yarns, etc. Can you would you be able to give us some idea of how the spreads have moved, sir, across the quarters?
How
the average spread between the yarn and the cotton has moved in terms of cotton or the raw material in the PV grey yarn, cotton grey yarn, etc. Can you give us some spreads trends, sir, the last 2-3 quarters?
Yes, so I can give you that spread from financial year 19, 20, 21, and then present scenario of this PV grey yarn, cotton yarn, PV dyed yarn, Milan yarn, denim yarn, and then raw material prices. I can give you the brief of that. In financial year 19, the PV grey yarn prices were rupees 171. Average price was rupees 171 per kg, and then these were reduced to rupees 157 in financial year 20, which was a loss-making year because of this COVID and all. And then in financial year 21, it was rupees 150 PV grey.
Yeah.
It was a bad year for PV grey yarn, and now present scenario is it is 208 rupees per kg PV grey yarn. So you can say that 33% price increase is there in PV grey yarn, and you can witness within our company that the units which are producing this PV grey yarn are doing well, like our Rishabdev unit, like our Maswada unit, both units. And then if we will talk about cotton.
Sir, you given, so this realization is there in the slide, sir, slide 9. I'm asking whether you can give the
PV grey yarn has been increased by 33%.
Yes, sir. Can you give the spread, sir? Spread between the selling price of 208 / the input cost, basically. Can you give the spread, sir?
The spread is around rupees 80 to 85.
In the current year, sir?
Yes, contribution you can think about 80 to 85, rupees 85.
Okay. And in the cotton grey yarn, sir?
It will take average count of 230 PV.
Okay. In the cotton yarn, sir? Cotton grey?
Then cotton yarn in financial year 19, the price was rupees 220 per kg. Then we will go directly to financial year 21. It was 209, and now this price is 330 rupee per kg. So you can say around 50% increase in cotton yarn. PV dyed, it was about 119 in PV dyed. It was 119 or 120, you can say, in financial year 19, and now it is 216. So you can say around 90% increase in PV dyed. And in case of melange,
sir, we are getting this pricing, sir. Can you just give the spread alone, sir? Spread, sir.
The spread in case of cotton, in case of cotton is around rupees 90 to 100, and in case of PV it is 80 to 85.
And PV dyed, sir?
Pardon?
In PV dyed yarn?
In PV and we have considered this PV gray and dyed both. Average price increase, average contribution per kg is around 85.
Okay. And on melange, sir, melange yarn?
Melange yarn, in case of melange yarn, it is spread is around 120.
Sir, compared to first quarter to now, how is the spread, sir? If you look at the first half of the year to now, can you give some perspective on how the spread has moved, sir, in the third quarter?
Because of this price increase, I am talking about this present contribution in last quarter, but before that, the spread was better than this Q3.
Okay. So going forward, sir, in the Q4 and Q1, given the current cotton prices and the synthetic prices, how do you see the spread, sir? Do you think it's maintaining here or going down further?
Actually, as of now, it is becoming difficult for us to transfer the whole price increase to the customer. But yes, we hope that it will settle down. You can say within a month or so, it will be settled down.
Okay. And on denim, sir, the 221 is pricing the third quarter. How is the spread, sir, in denim? Contribution spread?
In case of denim yarn?
Yeah, denim.
Or denim fabric?
Denim fabric, sir.
Denim fabric, it is being sold at around rupees. I will tell you product wise. Just give me 1 minute.
Yes.
Just 1 minute.
Okay.
Just 1 minute.
Sure, sir.
Yes, please.
Yes, sir.
In exports, the sale price of this denim fabric is around rupees 230 to 275 per meter. And in domestic, more or less same. Domestic prices are better as of now.
235, sir?
It is around 300 per meter.
300. And the spread, sir?
The spread depends on kind of product mix.
Any range you can give, sir? Any range?
Sir? Up to Mr. Krishna Kumar, may I request you to
It varies. It varies from product to product.
Fine, sir. I'll go back to it, sir. Thank you, sir.
Thank you. The next question is from the line of Abhilasha Satale from Mehta Investments. Please go ahead.
Thank you for the turn. Am I clear now?
Yes, you are audible. Please go ahead with the question.
Okay. Sure. Yeah, thanks. Sir, basically, I want to ask that you have mentioned that you will need to take price increase in the range of 10 to 15 rupees to pass on the entire PV raw material prices what we have seen. So after passing on this 10 to 15 rupees, probably over Q4 and Q1 of the next year, we are talking of maintaining the margin of this 12 to 13%. Is that a right reading?
Yes, Abhilasha, just repeat your question. I could not take it properly.
So, sir, I'm just asking about the raw material price increases. In the current scenarios, your spreads are in the range of 80 to 85 rupees. And you are saying that as raw material prices have increased, we need to take another price increase of 10 to 15 rupees to pass on the entire raw material price increase. So after taking this price increase, we are talking of margins maintaining in between 12 to 13%.
Yes, actually, if you will see about this profit margin in this last quarter, historically this last quarter remains very good from textile perspective. So there are many reasons because of which the last quarter remains good than other quarters of the year. First reason is the selling pressure on every marketing person. They try to liquidate the stock. They try to push the stock in the market. So any kind of valuation losses and all are transferred to the market, because if you will see this stock valuation, it is cost market price, whichever is lower. So these stocks are around the 5,000 metric ton. In case of yarn business, these are 5,000 metric ton, and if it will be reduced to let us say 3,500 metric ton or 4,000 metric ton, the valuation gains will be there in last quarter, so we will be able to maintain that margin.
Okay.
And otherwise also, as RSWM policy, we used to take this contingency on the stock available on a cut-off date, and when we will sell it in last quarter, we will push this last quarter for sale. These kind of contingencies will be released in last quarter, and we hope that the profit margins will be better than this Q3 in Q4.
Okay. And sir, I mean, if we just take a little bit longer perspective, say FY23, then after passing on this, probably after passing on this 10 to 15 rupees cost price increase, the margins are sustainable at 80-85.
You know that price increase cannot be permanent.
Right.
Impact of price increase cannot be permanent for a manufacturer. It has to have transfer to the customer only. So in our case, the weaver is customer, and then weaver will pass on to the consumer. So it will be transferred because demand momentum is very good in domestic market as well as in export market.
Okay. Yes, sir. So you mentioned 80-85.
Recently, it has been noticed that China also is importing cotton yarn from India, and then this Vietnam, Cambodia, Bangladesh, all are importing the cotton from India. This will add to the profitability of Indian manufacturers, and as cotton yarn manufacturer, we also hope that we will gain about through it. Right, sir.
Yes. Sir, you mentioned 80-85 at the current spread. Can you give the same number for FY19 and FY21? I mean, how much was the increase in spread, just to take a perspective?
We can give you on a separate call, but as of now, these data are not available with me.
Okay, sure. Sir, my second question is...
It would be wrong if it would be wrong if I will tell any figure to you. Any amount. It will be
No, that's fine, sir. I'll take it separately. That's not an issue. Thank you. My second question is how much is the volume increase during the quarter on year-on-year basis? Like this, how much is because of the price increase, revenue, what we have posted around 38-39% increase. So how much is contributed through volume increase?
Volume increase, volume in terms of
PV yarn, you can say.
In terms of export or domestic both?
Yes. Yeah.
More or less same.
Okay.
If we will compare on quarter to quarter basis.
Okay, and year on year?
It is all because of value addition in the market. Because at that time also in Q3 of 2021, RSWM all units were doing production at their fullest capacity. And as of now, they are doing the production at fullest capacity. So there may be a gain because of this count change and all. Because of count change, the production may be higher. Because of if the count is finer, then production may be lower. Other than that, production, all the units of RSWM are doing production at fullest capacity. So we cannot say that in terms of quantity, this production of RSWM has been increased, or in terms of selling volumes it has been increased. We cannot say that.
Right, sir. Sir, and the last one is how do we see our debt moving? Because we are increasing 330 crores of capex and we have generated good cash flows during the year. So, what is our strategy on debt reduction?
Actually, it is a very good question. The debt is going to be increased with a few capex plans in pipeline. But this financial ratios and all, these will be maintained.
Okay. Sir, can you just throw some numbers, like, because in this quarter the interest cost has gone down. So going forward, how much, by when we will capitalize this?
Actually, if you will compare the figure of last quarter, outstanding term loan, I will tell you the figure. On 31st of December, this was 517, you can say. 517 crore term loan. And if you will add this working capital also, it was about 1,000 crore only. Right?
Right.
With this increased volume of production, this working capital utilization will also be increased, and this term loan will also be increased when we will avail these term loan for these expansions, like for melange, for denim, and for knitting and all. This term loan will be increased further, and working capital utilization also will also be increased.
Okay. So how much, like another 150 crores of debt increase we can see next year in FY23? Is it a right assumption?
Around 225 will be increased. With these repayments, 330 out of 330 we will repayment next year will be fine. Next year repayment अभी कितना है? 115 है ना, तो 300 ऐड करेंगे. 330 around 150-175 crore will be added next year.
Yeah. Okay. Sure, sir. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, this was the last question for today. With that, we conclude today's conference call. On behalf of RSWM Limited, thank you for joining us, and you may now disconnect your lines.